Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by Ever.Ag. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a lovely spring day here, 70 and sunny in Chicago, right before we get hit with some big boy warmth. It's going to be like 90 degrees for a couple days. No thank you for this guy. Get back to the 50s overnight and 70. Thank you very much. And joining me today from a presumably toasty Wichita, Kansas, Director of Feed Foundations, Mr. Jake Kingsley. Jake, how are we today?
Doing very well, Jim. Good to see you again.
Yeah, likewise. We tried to get you on the show last week from the Southeast Milk Inc. leadership experience known as Smile. You are rocking the hat. You were down in St. Augustine representing Ever.Ag along with Matt Wolf, and also guest appearance from Mr. Mike North, hanging out with the dairymen of the Southeast. How was that, Jake?
It was good. Everything went really well. Those guys put on a good show. Good time spent with quite a few dairies over the course of a couple days there. The only thing that would have made it better is my video quality actually coming through. So got to apologize to Ray and Travis for my failure there, but we'll get them again next year.
Yeah, big shout out to Ray, Travis, the entire SMI crew are always such gracious hosts and put on a really good conference. This is my first miss in a few years and regrettably could not attend. But yeah, Jake, you had I think sounded like a really nice interview, boots on the ground host of the show, and then things just didn't work out. I don't know if they got hit by lightning or whatever happened down there.
Yeah, it was good in person. You just had to be there.
Yeah, there you go. Just like most of our jokes, Jake, if you were here in person, it doesn't come across as funny on the recording, but in person, we are pretty funny.
Yeah, it's one of those deals. One of our deals.
In the meantime, we've got a bit to run through today, Jake. So we're going to chat some WASDE that came out on Monday. But first, we're going to ask Lexi to kindly timestamp the broadcast because Lexi does the timestamps. And every week, I ask Paige to kindly timestamp it. And it's Lexi who puts the time on there. So for the viewers, as you're seeing this time on the screen right there, that's Lexi doing that. So thank you, Lexi. It's Wednesday afternoon. It's about 3:15 Chicago time. Markets are closed today. Last day of trading for May. Futures had a very exciting side bet for a glass of milk with Mr. Verl Prather from Atlanta, Illinois on May expiration. It's always interesting to see how the markets react. But in terms of those settlements today, we were focusing on July as the nearby, and July corn closed up 3 cents at 445.5. We had December corn down just a half cent at 440.5, so holding that 440 level for D's corn. We had July beans up 5 1/4, back up towards 1080 per bushel, with Novi beans up 1 3/4 at 1061 1/4. July meal, that not as stubborn little byproduct, was down today, down 140 at 291.90, and December meal was down 80 cents per ton at 303.50. So the one stubborn element about that stubborn little byproduct is that December is still holding that $300 per ton level. So it's been a formidable support zone at this stage for good old protein. And that's as its byproduct partner, Mr. Bean Oil, continues to surge. And we now have nearby bean oil up over 50 cents a pound. It's over 52 cents a pound. Today up 84 points. So bean oil continues to move. Jake, it's you and me today. We're chatting the feed markets here on behalf of our dairy and livestock producers. I'd say for the most part, and we emphasize that because we are okay seeing feed pricing remain under some pressure here. So, I mean, for the U.S. corn grower, not as pleasant of a stretch here watching December pricing on the corn market. Part of this maybe stems from the WASDE report we had on Monday of this week, so a couple of days ago. And I guess, Jake, What was your take on that WASDE report that came out Monday morning?
I guess it's nice that we are finally back in a market where the most exciting headline that we get is either a weather report or a miss on WASDE expectations that looks to be quite a bit lower than what we were anticipating and yet is not bullish. We are kind of back to the good old days of trading these feed markets. It feels like we've been through a couple of years of drought and some different war headlines and all of this geopolitical stuff. And right now it feels like we are very much set up to watch the weather and see how this crop goes into the ground and develops over the next couple of months here. The old crop WASDE corn balance sheet came in pretty well as expected. They increased demand a little bit, which trimmed up our ending stocks. Nothing extraordinary there. Certainly created at least a little bit of support for the remainder of this crop year to kind of keep corn held up here in the mid fours. The surprise came in new crop, where we expected to have 2 billion bushels of ending stocks in the US, and it came in at 1.8. And that was mostly on the back of some pretty lofty demand numbers for the next crop year. Exports, ethanol, and feed demand, all pretty stout. Production numbers were equally strong. I mean, we had a good look at what those were going to be when we got that March acreage data. And so they plugged in the same acres from that report along with trendline yields. So we've got what we're expecting to be a big corn crop going into the ground right now. Weather has been near to ideal. Planting pace is right on track. Things look very good. So again, it's just a weather market for the next couple of months. It feels like when we move from 2 billion bushel expectations to 1.8, that you should see the market just skyrocket as it digests those numbers. And it perked up a little bit the day of report and then came back down the following day and has been kind of steady here since. And I think that's because we have huge production numbers. 1.8 billion bushels of ending stocks is it's not a bullish number at all. It's plenty of wiggle room. You could argue that there's probably some room to trim some of those demand numbers. I think that folks are probably assuming that there's going to be room to trim that yield number too. That's a pretty big trendline yield number at 181 bushels. So there's a lot of time for this balance sheet to be adjusted a few times before we get to harvest. And there's still plenty of cushion for this thing to be comfortable right where we're at. We don't need to be worried about going to $5 corn today. We're probably not going to go to $4 corn anytime soon unless we just get all of this crop in the ground and get really good rains on it and perfect sunshine and temps, and it's just blowing us away. So I would guess that we're going to be pretty range bound here for a little while, and everybody's going to want to let this thing develop probably for the next 30 or 45 days before we see anything real dramatic change there. And then 45 days from now, you get the final planting numbers from USDA there on June 30th. I would bet that's the first big move that we have in this, unless we have some sort of dramatic shift in weather patterns that really changes the way the crop conditions shape up. Soybeans came in a little bit of a thinner balance sheet than I think we would like to see there as well. I think the new crop number was 295 million bushels of ending stocks. Anymore, when we get under 300 million, that starts to be okay, we got to do this thing really well. We got to get what we're expecting out of this crop, or it starts to get thin in a hurry. So that market did respond pretty aggressively on report day. It stayed pretty firm here following that. Soybean meal did not follow in its footsteps. It did the day of the report, perked up, and then the day after fell off about an equal amount. And again, that's driven by pretty healthy soy oil values there, I think. There's been good exports. Soy oil futures are up at some of their highest levels we've seen in quite a while. That's making margins at these crush plants pretty healthy. And so our feed buyers benefit from pretty stagnant soybean meal values. And again, down here at the $300 mark, it's hard not to step into a good chunk of that stuff. So we've had a lot of folks getting a lot of things done. Certainly we've been done with old crop for a while, and new crop is giving good opportunity to get a big chunk of what you need done there. So working on that in the physical realm, and then managing corn on the exchange where we can, as we expect this big production number could put some more pressure on the market over time. So we want to remain flexible to the downside. Yeah, pretty exciting report compared to what we were kind of expecting, I guess.
Jake, you pointed out the the numbers from the government were a bit lower than we expected. We, and also the general industry as well, but the reaction of, okay, I think we got a bump in pricing. You noted, especially in beans, we had a pretty nice jump there because we were also coming out of the weekend of maybe there's some, at least tensions have eased slightly between us and China coming out of those meetings that we had in Switzerland between our respective governments. So maybe helped give a little pop to the soybean market that one of our bigger historical buyers of the last decade or two is in the marketplace again, maybe. And then to have this much tighter balance sheet that you noted for beans. I mean, that new crop bean number, as you said, Jake, you get under 300 million bushels. I mean, that we start to get pretty tight. But I think focusing on the corn side, we had such big expectations coming out of the Outlook Forum back in February when it comes to that new crop corn number. I mean, we thought we were going to have near 2 billion bushel corn ending stocks for next year. So we're talking at the end of 2026, that end of August of 2026, maybe have 2 billion bushels of corn on hand. And the USDA gave us 1.8 billion bushels. So in the moment, not nearly as exciting, maybe to the robots, right, as the 2 billion bushel number. But at the end of the day, as you said so eloquently, there's nothing bullish about 1.8 billion bushels of corn sitting here in the country as of the end of a marketing year. That's pretty stinking bearish. So, like, as you started this entire conversation, Jake, with we might just be back in just a good old-fashioned lower end of a commodity cycle where the feed markets don't have a lot to watch other than weather and maybe a dramatic shift in a macro or geopolitical element. And we have been in those elements of the commodity cycle where all of those things are happening at the same time. I mean, my goodness, for a feed buyer, the past, let's say 3 to 4 years, there's been a couple pretty brutal stretches there. Great opportunities for the row crop farmer, of course. But for those buying this stuff, had some pretty rough stretches. So as we trade on May 14th, there is an element that you noted. We've planted this thing at a pretty good clip. Weather, which was considered to be too dry back in Jan, Feb, March, is now pretty stinking good. I noted in the intro that it's going to be a little toasty here across the I-states for a day or two, but I don't think a corn plant minds when it gets planted in nice moistured soils at warm temps and then has a beautiful stretch of sunshine and hot temperatures to grow after being planted. So we also have to keep in mind, though, it's only May 14th. And I think that's very important for the viewers and listeners. Jake and I, we're talking what is seemingly been the stars aligning for a bearish story longer term in the feed markets and giving us opportunities to buy and or hedge our feed. It's only May 14th. And as Verl No Doubt Prather has noted, managed money is acting like it's June 14th. And that managed money is acting like there's a beautiful summer ahead of us with zero drought issues and zero heat issues between May 14th and August or September 14th. And we know that that's a long stretch of 3 to 4 months where you've got plenty of opportunities for some problems. So we need to keep an eye on that and take advantage of these prices down here while we have them. And not because we're necessarily bullish, but because it's a good opportunity and we have to jump on it. And Jake, one more thought before we let you jump off. Not necessarily highlighted in the WASDE report, but you've spoken on the cottonseed market a handful of times as of late. Any updates or changes in that market over the past couple weeks?
I don't know that there's been a ton of change there. I think the story remains very similar because, like you just said, on these other crops, there's a long ways to go there. So there's still some unknown, but acres are expected to be considerably lower than last year. You know, this 9.8-ish million acres is well off of the 11 to 12 million we typically see. Soy oil values do not help out cottonseed demand if you're a feed buyer because they are strong. And so the cottonseed crushers will try to get their hands on as much seed as they can to process that. And also, I've been talking with a lot of dairies around the country about this, about, hey, you need to either look at displacing this in the ration or figuring out how much you're going to feed and start to commit to a healthy chunk of that. Ultimately, prices right now for next crop year are up 10 or 15% over what you probably bought last year. And I've talked to several dozen dairies about this, and only a couple of them are either reducing or removing cottonseed from the ration altogether. Virtually everybody else is keeping it in. So demand doesn't seem to be going anywhere anytime soon. Now that one starts to get scary because about half of that crop grows in the Texas Panhandle, and they can get into a hot and dry summer in a hurry. And then if you have a yield problem, this thing gets ugly fast. So yeah, I think the action item there is that if you know you're going to feed it, you probably better start buying some of it to ensure that it's available to you when you need it next year. That one just could get a little too wild too fast. So
Good deal. Okay, Jake, those are some great insights. We appreciate it. And welcome back. Glad you're back in the seat, and great to have you on today. And we'd also like to thank the Ever.Ag Insights crew for their support, and a big thanks to Lexi for her production magic. And thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the grain feed.